Hi, welcome to a video on earnings per share. As I said in the introduction video, this can get quite complicated, and we will learn exactly how diluted earnings per share is calculated in a complex capital structure in an upcoming course. Lots of big companies have stock contracts out there like options and warrants, and they have convertible bonds, and they have subscribed stock. They have all kinds of potentially dilutive securities. Thus, it's an important topic, but we will leave it for later in your education. For now, let's just introduce how this is calculated so that you know that it exists, and you have the concept in your mind, and then in an upcoming course we'll show you exactly how it's done. A very interesting topic and a very important calculation to get right, to do well, to do in a very sophisticated manner. Great. So here's our case. See the multiple step income statement for Racket Sales Corporation. Here's some additional information. On January 1, 2024, that company had 100,000 shares outstanding. On July 1 of 2024, the company issued an additional 40,000 shares. The company did not pay a dividend on its common shares all year. And the company does not have any potentially dilutive securities outstanding at the end of 2024. This is what we call a simple capital structure. Okay, and let's show the earnings per share, what we would add to the income statement to do an earnings per share disclosure. All right. So here is the income statement that we did, the multiple step that we did earlier. You have this in your notes, and you're seeing even some of my marked up notes that I did. And of course, these will not be shown to the general public, but this will, and 2 additional years will again. Remember that it came to a bottom line of 300,000. Well, that becomes the numerator. Remember, in weighted average or in net income available to common shareholders. Weighted net income available to common shareholders, the numerator in earnings per share is net income minus any dividends paid to preferred shareholders. We have no preferred stock in this company. Thus, the net income for common earnings per share is that 300,000 shown above. And then the denominator is the weighted average shares outstanding. Remember, it started the year at 100,000, and it stayed there for 6 of the 12 months. It then went up to 140,000, and we had 140,000 outstanding for 6 of the 12 months. Thus, a weighted average calculation, we would multiply the 100,000 times 6 months divided by 12, and that's 50,000. And then the 140,000 that was outstanding for 6 of the 12 months, 140,000 times 6/12 is 140,000 times 1/2. That's 70,000. And 50,000 plus 70,000 gives us a weighted average shares of 120,000. So let's call this, remember, weighted average number of shares. And so the $300,000 divided by the 120,000 weighted average number of shares means that basic earnings per share is $2.50 per share. It is now going to be 140,000 starting in 2025. But this is the key. This is that was earned for the common shareholders from January 1 to December 31, 2024. On a per share basis, well, for half the year, that was split by 100,000 shares. And for the second half of the year, it was split by 140,000 shares. Now, think about why we would do this. If we said, oh, it's fine to say earnings per share is 300,000 divided by beginning shares, net income would have been $3 per share. And that would have overstated what it is. Conversely, we might have said ending shares 140,000. Well, that would have understated the earnings, how happy the common shareholders are, because the ones that held shares between January and July and June 30th, well, those earnings were on the 100,000 shares. Were split by only 100,000 shareholders. So that's the weighted average. That's net income available to common shareholders divided by weighted average shares outstanding. And remember, there are no potentially dilutive securities, so diluted earnings per share is going to be the same. Okay. And I hope you had that when you worked this case on your own. And that is earnings per common share. So not quite as straightforward as it might have been when we introduced the term in basic principles courses and just said, hey, earnings per share is net income divided by number of shares outstanding. Well, it's just a little more sophisticated than that. Net income in the numerator is actually net income minus any dividends paid to preferred shareholders. That's net income available to the common shareholders, since this is earnings per common share of stock. And the denominator is outstanding shares, but specifically the weighted average shares outstanding, because it changes over the year. And then we would also provide diluted earnings per share. All right, and that's earnings per share video. In the next video, we'll see how this would have looked were there discontinued operations at this company.